Have you ever just wondered how some of the world's wealthiest people seem to operate in a totally different financial universe? Well, it's not always about secret accounts or anything shady. Today, we're going to pull back the curtain on the completely legal world of Europe's modern tax havens and see exactly how they work.
It's the big question, right? How do these huge corporations and super-rich individuals legally manage to shrink their tax bills so much? The answer, it turns out, has really changed. It's way less about hiding money in some secret vault and much, much more about a clever and totally legal strategy of choosing where you or your company officially calls home.
So, first things first, we gotta update our definition of tax haven. Forget that old movie image of some shady island bank. Today, it's really just a country or a jurisdiction that actively uses its own laws to compete for global capital and talent. This isn't about illegal tax evasion. It's all about perfectly legal tax optimization.
Okay, so how does this strategy actually play out in the real world? Well, it's not a one-size-fits-all kind of deal. The playbook is completely different depending on who you are, whether you're an individual just trying to protect your family's wealth, or you're a giant global corporation looking to boost profits.
And this is really where the road splits. On one side, you've got your high net worth individual. Their goal is, personal. They want to shield their money from things like income tax, inheritance tax, capital gains, the works. But on the other side, you've got the corporation, and they're playing a global chess game, hunting for low tax rates and really powerful international tax treaties. So let's follow both of these paths and see where they lead.
All right, let's start with the individual. We're diving into what you could call personal paradises. These are places specifically engineered to attract wealthy residents with some, almost unbelievable tax rules.
And you really can't get any better than this. 0%. No, that is not a typo. Since way back in 1869, the Principality of Monaco has charged its residents exactly 0 personal income tax, 0 capital gains tax, and 0 wealth tax. For a wealthy individual, this is pretty much the holy grail.
But hey, if the glitz and glamour of Monaco isn't your thing, there's always Andorra, tucked away in the Pyrenees Mountains. It's not 0, but it is incredibly low. Andorra has a simple, flat 10% tax on personal income. And, this is the kicker, 0 tax on wealth or inheritances.
Now, to really understand just how powerful that 10% rate is, all you have to do is look at its neighbors. France's top tax rate, 45%. Spain's, 47%. By just moving to Andorra, someone could slash their income tax bill by almost 80%. That is a massive, massive incentive.
Okay, let's switch gears and jump into the corporate world, because for a big multinational company, the game is completely different. It's not about finding some tiny place with 0 tax. No, it's about plugging into a major economic hub that offers efficiency, full access to huge markets, and a powerful network of tax treaties.
So here are the big 3 corporate hubs, and each one has its own special move. Ireland is the famous gateway, with its super low 12.5% rate that brings in giants like Apple and Google. Then there's Luxembourg, which is all about flexibility. Its main rate looks high, but they offer special rulings that can get a company's actual tax rate down into the single digits. And finally, you've got the Netherlands, the ultimate connector, with this huge web of tax treaties that prevents profits from getting taxed twice as they zip around the globe.
But of course, you can't just pack a bag and show up to claim these benefits. Gaining entry to these quote-unquote paradises, whether you're a person or a company, comes with a pretty steep price tag and some very strict rules. This is a serious commitment.
Let's take Monaco, for example. To become a resident, step 1 is you have to prove you have a place to live, and we're talking about some of the most expensive real estate on planet Earth. Step 2, you have to deposit at least €500,000 into a Monaco bank account. And finally, you have to pass an official interview and a full background check. They don't just let anyone in.
Andorra's path is different, but trust me, it's just as demanding. Their system is built around investment. You need to put €400,000 into Andorran assets, like property, then post a €50,000 bond with the government, and, this is a big one, you have to physically spend at least 90 days a year in the country. This isn't just a mailbox, it requires real physical presence.
So, all of these strict rules, the massive bank deposits, the property requirements, the minimum stay rules, they all point to the fundamental secret of how these places really operate in the 21st century.
For decades, the secret of the classic tax haven was just that, secrecy. It was all about hiding money from the taxman. But the new secret? It's something else entirely.
It's about legally and transparently moving yourself or your company's assets to a place where the laws are just written more favorably for you.
And this quote just nails it. The goal is to legally optimize taxes. The strategy is about choosing a favorable law, not secrecy. Every single jurisdiction we've talked about today has signed on to international transparency standards. The game isn't about hiding in the shadows anymore. It's about making a choice out in the open. Which leaves us with a really big, kind of thorny question. As all these countries compete with each other to attract money and business by offering lower and lower taxes, are they just creating a race to the bottom that ultimately hurts everyone? Or is this competition actually a healthy, vital part of a global free market, giving people and companies the freedom to choose the system that works best for them? It's a tough one to answer.